Okay, it's a bounce that we have, and it's a good-looking screen. 70 points on the Nifty. 10,583 is where the Nifty is trading at right now. And this despite the US markets being down. We highlighted why a downbeat US market doesn't necessarily need to mean downbeat emerging markets as well. And at least in the near term, it's playing out. We sort of put out indices around the world and what levels they touched and from where they bounced. I mean, the basic idea behind that was that maybe in the short term, those downside level targets have been met. And now we kind of sort of expect some bounces. That's basically what's coming up on your screen. So overnight, US was down, US markets were down. And this despite the fact that Europe closed higher. Oil was firm. I mean, those diplomatic tensions between Saudi Arabia and US. Yields did nothing very much. Dollar continues to be lower. I mean, against Asian emerging market currencies and emerging market currencies otherwise as well, dollar is not being bid. And that's always good news for emerging markets generally, emerging market stocks and other emerging market assets as well. So that's what's going on at this point. 74 on the Nifty. I think we were off about 20 points, maybe 15 points off the high, but not bad looking sort of start for the week after what we had yesterday. Ekta, morning.
Hi, Prashant. Absolutely. Well, we've seen follow-on buying after yesterday's trading session. There's stability in the markets as well. So that's really what stands out. We have the Nifty, which is above 10,550 as we speak. And we have a positive advanced decline ratio for the second day running. So that seems to stand out as a parameter as well. Lot of stocks in focus. So, for example, IndusInd, which is reacting to its numbers. It was quite volatile or weak post numbers yesterday, but seeing some amount of traction today. So up 2.5%. South Indian Bank, which is zooming away as the slippages have declined significantly, over 60% on a sequential basis, and something like an emphasis ahead of numbers today. So that will be post markets. Hero comes out with numbers. Volume growth was just single digits this time round, and Federal Bank will also be releasing numbers. Kerala Impact will be in focus on account of Federal Bank. So a lot to discuss. Let's get going in terms of the technicals of the market then. Sudarshan Sukhani joins in for that. Sudarshan, hi, over to you. Is the Nifty poised for further upside from here on, and stocks you'd recommend?
Yeah, good morning again. See, the Nifty has broken out of a narrow trading range where its resistance was coming as 10,500, and the index is now well above that resistance level. So I would think that it is poised for further gains, but I don't think the next leg of gains will be as easy as the first one was. We had these big up days earlier, and now it's not likely that we will have the same momentum on the upside. So it's going to be slow. My suggestion is you buy whenever there are minor dips in the Nifty. There's no need to rush as of now. There will be corrections and dips, and we are very clear that we want to be buyers in those dips or in any minor correction now. So that's the approach to the market. That applies to the Nifty Bank also. Be ready to buy on any minor dip which will come. Don't have to rush now.
Okay, so basically don't chase prices higher. That's what Sudarshan is saying. And but stay ready to buy when you get dips. Stocks, Sudarshan, what would you trade?
Well, I would go and buy Maruti. You know, Maruti had that vertical decline. It's amazing how a blue chip stock that did not stop from 1,000 to 10,000, then went and gave up so much of its gains, 30%, 3,000 points. Now it seems Maruti is coming to a stop. It does give a sense, and charts are suggesting that there is support here, and Maruti is now for today, and as well as for a position trader, it's a buying opportunity. The second trade is in Escorts. You know, Escorts had that same chart setup. When it started going up, it felt as if, you know, you have to buy it at 1,000 or 900 or 800, otherwise you will never get it. Now we are getting it at 550. Escorts is also a buying opportunity for the day trader, for intraday trading today, and as well as for position trading. Both are trades that you want to hold on if you can. The third is a short sell, same sector, but that is Tata Motors. I have been very bearish on Tata Motors from 500 downwards, and while price declines are unlikely to happen significantly, any short seller will make a little bit of money for the day.
Okay. On that auto theme, since you're discussing autos, what would your recommendation then be on Eicher Motors as well as Bajaj Auto? Eicher Motors high for the year was around 30,000. You think it's a steal now?
No, I'm not as upbeat on Eicher Motors as I am on Bajaj Auto. Bajaj Auto has gone through a deep correction and there is significantly high beta there available. So Bajaj Auto is a buying opportunity. I don't have an opinion on Eicher. Essentially, it means I'm not very upbeat.
Sudarshan, one last quick word on Indiabulls housing. It's seen a sharp reversal from the day highs. Any thoughts?
Yes, I think, you know, and all NBFC charts are suggesting that a small base has been built and some kind of a relief rally is in the offing. That's exactly what's happening to Indiabulls housing. I would not touch NBFCs at all. These are probably bear market rallies and they can fizzle out anytime.
Okay, well, we have a couple of Twitter queries for you, Sudarshan. So our Twitter user has around 6,000 shares of Madison Sumi at 346, averaged it down to 299, wants to know the view on the stock. DJ Running.
Well, you hold on, and I don't have a time frame for, you know, coming back into black. But it's a good company. Now these things happen. Just hold on and do nothing.
Okay. All right, Sudarshan. We're going to leave it on that note. So that's the view coming in on Madison. But do remember that you can tweet your questions to us at CNBC TV 18 News, at CNBC TV 18 Live with the hashtag AskCNBC TV 18, and our technical experts will be advising you on your investments. Okay, well, let's get in some more F&O calls then. We have Gaurav Bisa of LKP Securities who's with us this morning. Gaurav, hi. What are you recommending, both index and stocks?
Good morning. For index, we are more upbeat on Bank Nifty for the reason that on 4-hour charts, it has given a breakout above level of 25,500, and there's another smaller breakout above level of 25,650. If the current levels are held, we can expect another 250-300 point rally coming by tomorrow. So we are positive on Bank Nifty. For Nifty, we would be deploying a buy on dip strategy. It has given a breakout about 10,500, 510 levels. So any dip towards 10,550, 540 can be bought. Stop loss of 10,490 on the upside, 10,640 to 10,670 would become quite possible. As far as the stock specific recommendations are concerned, the first recommendation would be buy on Tata Chemical futures. We have seen the stock correcting from levels of 700. It had a strong support at 650, bounce from those levels. We have seen short covering coming from those levels, and if the current level is sustained, it can again retest level of 700, 705. It's moved up somewhat in last 10-15 minutes. So any dip towards 665 can be bought. Stop loss of 656, target of 680 to 685. McDowell is looking weak. About 3% over addition has happened today. So some shorts are seen getting built. 530, 535 is a very immediate resistance level and very strong one. As long as trading below that, it can retest the level of 510, 505. With a stop loss of 538, one can sell McDowell futures for target price of 518.
All right, Gaurav, thanks very much. Appreciate you joining in. Market, by the way, about 6 points, 7 points off the high point of the day. So it's good going so far. Just leaving you with a few names. South Indian Bank, it's been buzzing for a while, 15% higher. You know, you look at Escorts, which is up 5.5%. Escorts got beaten down properly in that market pullback. India Cements is up 5%. There's Graphite, which is Graphite India, which is up 5%. Jubilant Food, which reports, I think, on the 23rd or the 24th, that is up about 4.5%. 12.30 on Jubilant Food. Motherson, we had a question on that just a while back. I mean, are some of the other names which are coming up with gains at this point in time. I mean, there are losers as well, but advanced decline is positive. I mean, it's a broadly okay kind of a day, up kind of a day so far. We take a very quick break, the first on the show. Up next, we talk about commodities. We also have a special conversation on the commodity space coming up. Earnings also in focus. Infosys, Hero MotoCorp report. We get you previews on the other side.
Well, it's going to be a busy week for earnings. We have Infosys and Hero MotoCorp, which are coming out with numbers today, and even something like Federal Bank. And tomorrow we have Reliance Industries and other smaller banks such as DCB, which will be coming out with numbers. So a lot to watch out for. Even ACC actually will be releasing numbers tomorrow. But let's focus on today, and let's focus on the big boy, Infosys, which will be delivering numbers post-markets. Rima joins in to tell us what we can expect this quarter. Rima.
Dollar revenue seen higher by 2.3%. On a constant currency basis, it should be a growth of 2.8 to 3%, so lower than the 3.7% that TCS reported, and the top line will be powered by the deal wins that the company has been winning. With respect to margins, an improvement of 60 to 70 basis points at 24.35%, which is above the company's guided band of 22 to 24%. TCS had reported a 150 basis points margin improvement. For Infi, we're expecting the margin improvement to be less on account of the fact that the company has been making investments in digital, as well as a possible wage revision to their senior employees. But that will drive a 15% increase in the company's profitability. The profit number will also look optically a lot higher, because in the prior quarter, there was a write-down of 270 crore, which had negatively impacted their profits. With respect to the FY19 guidance, constant currency revenue guidance of 6 to 8% is likely to be maintained. Their margin guidance is at 22 to 24%. Most people believe that they will maintain it because currency can go in any direction, but there is a possibility that they will look to revise it higher. The actual estimates for Infi, for the full year is closer to the upper end. That's 24%. Goldman Sachs even expecting a 24.7% for the full year. What should you track? Management commentary on how the rupee depreciation is benefiting their margins and what they're doing with their benefit. Are they passing it on to clients? Are they using it to arrest the attrition? Secondly, a pickup in digital, because TCS had reported a whopping 60% improvement in their digital growth rates. Thirdly, can the company continue with that $1 billion in terms of deal run rate, something that they hit in the prior quarter? Fourthly, BFSI was under pressure for them in the prior quarter, declining by 0.2%. That needs to recover for a broad-based pickup in their top line. And finally, on attrition, because that quarter saw CFO Ranga resign, and plus their quarterly attrition is trending at 23%. That's a very high number, especially when you compare it to 10.9% that TCS had. The stock per se is off about 8% from its lifetime high, but in the last 2 days, it's picked up. Back to you.
Rima, thank you very much for that. So that is Infi. Do remember to catch the management speaking and addressing the press at 4:45 later this evening, and of course we'll be on top of the numbers when they are announced. So that is the big one today. Well, there is another one, big one, which is going to be Hero MotoCorp, which will report numbers. Sonia is here with what we can expect from the numbers. Sonia, over to you.
Well, thanks for that. This time is going to be a slow growth quarter for Hero MotoCorp. The consumer sentiment has been on the weaker side. Rural growth has been subpar. Fuel prices have been high, and dealers indicate that despite a lot of the discounts being given, the numbers are just not picking up. That's the reason why the volume growth for Hero MotoCorp has slowed down to about 5.5%. This compares to an average of around 15 to 20% in the preceding quarters. It was in high teens last quarter, and the quarter before we saw about a 24% growth. So the volume growth has definitely slowed down. All of this will put the revenue growth to sub 10% as well. On the margin front, we're expecting a 200 basis points fall in the margins. That's because despite the price hikes that the company undertook, the commodity cost pressures have been high, and that will put pressure on the business. Not just that, the Haridwar plant tax benefits have expired. That will also put pressure on eventual profitability. So we're expecting the profits to fall this time around. Now, the stock has perhaps priced a lot of this in, because the stock is down 25% in 2018. It's now trading at about 12.5 times forward, which is cheaper than its historic averages. But the feedback that we get from a lot of the dealers, a lot of the players in the market, is that the worst is not over in terms of the slowdown. The Navratri season has started off on a very slow note. Both in motorcycles and in scooters, we're not seeing a good pickup. So perhaps, that's the reason the stock has been under a lot of pressure as well. Key things to find out from the management: they have been undertaking some cost reduction efforts. Whether that is over, or will we see any more benefits of that, and whether they will be able to hold on to margins at this 15.5% level despite the rising commodity costs. All of that will be watched, but largely a weak quarter expected for Hero MotoCorp.
Okay, all right, Sonia. Thanks very much for that. So yes, single-digit volume growth this quarter for Hero as compared to double digits in the past 2 quarters. But onto an exclusive from the sidelines of the India Energy Forum, Sarah Week, underway in Delhi. Our colleague Manisha Gupta caught up with Scott Sheffield, the board chairman of Pioneer Natural Resources, began by asking him his key takeaways for Prime Minister Modi's meeting with the global chiefs of major oil companies. Listen in.
He summarized a lot of the recent laws and regulations to reduce regulations and allow more investment to come into India, especially in the upstream sector, and they just had a round of 55 blocks which were acquired, I think, by more local Indian companies. I think he was disappointed there wasn't Western capital coming in yet. I think they have to prove up more of their oil and gas in the unconventional first, before you start bringing in Western capital. The second point that he made was the price of oil was too high. And the UAE minister and also the Saudi minister was in the meetings, and I think he was making a point to them that with Brent recently went up to $85. It's just way too high. It's hurting countries like India very much. So that was his second major point.
Sure. So, you know, I do understand that you've been talking to Reliance. There are more companies now looking to be part of the U.S. shale drilling, etc. Partnership. How has that been working? What kind of investments, and how do you look at these partnerships, these interests rather?
Yes, our partnership with Reliance has been excellent. It's been going on for 7 years. We have both announced publicly that we are divesting for different reasons. We're divesting of our partnership interests because we have too much in the Permian to invest, the Permian Basin. It has better returns than the Eagle Ford, and I think they're divesting because they're investing more and more capital in India. Both in the downstream and also in telecommunications. But it's been excellent. Most of the U.S. shale plays started with foreign investment from companies all around the world, whether it's from India, from China, from Europe, but most of that's how the U.S. shale, because we needed lots of capital, the independence in the U.S. And so initially all the joint ventures were done with foreign companies coming in.
What is that India can stand to learn from the U.S. shale boom that we saw?
Yes, I'll talk mostly about one of the biggest risk on U.S. shale that we had to solve was water. Secondly, you have to open up, you have to deregulate the industry and allow them just to, we're regulated in the U.S. by our states. And so I think India is going through that, and the Prime Minister has done a good job of deregulating, allowing the industry to move forward quickly.
Okay, we are going to slip into a very quick break here. We come back and we take stock of where the market is headed from here. Ashwini Gujral comes up, joins us.